Hey, I think we're live without any
I see me.
major foul ups today. Oh, goodness. So, welcome to the Atlas Tuesday weekly live stream. My name's Andy. On the right of your screen is Matt, and we're with Atlas Precision Consulting. We're tool builders. We build stuff normally that's going to plug into P21 or modify P21 in some way. Matt, you want to run down the list? You're way better at that than I am.
The list of we are top to bottom P21 when it comes to integrations, EDI solution. Well, working with EDI solutions, we have a little side of Magento developer with some e-commerce solutions. But the biggest thing we like to do is just fix your pain points. It's not so much how P21 handles it; it's how we just get the results that you're looking for.
Absolutely. So today, every week we try to pick a topic that just to, kind of do a deep dive on P21, things that people have asked us about. And we want our YouTube channel to kind of be a resource of things that we've learned over the years, trying to help people through their P21 issues. And today we're doing one that was requested by a viewer, and it's landed cost. And so we're going to be talking about what that is and how it works to the best of our ability. I don't know, adoption rate on landed costs in our customer base, maybe 15-20%, maybe.
It's pretty low, and it actually, I mean, it works. It's I'm trying to say this too bad. It works as I would expect it to work. Like it doesn't, but there is some downfalls to it, and there's some easy ways around landed costs, but then there's also some clunkiness to it, which is to be expected.
Yeah, I think for me, my observations of it are, and we brought an importer through it, like somebody that they primarily import their products from overseas. And there was a lot of complexity around their landed cost because different countries, different duty rates and things like that. And we were able to get landed cost pretty much the way that they needed it. And so what I would say is, I think from my experience, the setup is fairly intense, maybe even a little painful. But I think once you get it in and get it working, it's just there and it pretty much works and it becomes a maintenance task. So really, I think a lot of it is just about wrapping your head around how you want to deploy it, how you want to set up your drivers, and what stratifications you want to use for that. And once you have that figured out, I don't think it's all that bad.
No, and it's just you got to do some stuff in company maintenance. You got to do some stuff in system settings, but you got to do them in the right order.
Sure.
Or thing. I would say the biggest thing with the landed costs is just like a lot of stuff that we talk about is write it down first. Like, what are you trying to accomplish? How do you need to accomplish it? And then it's a little bit easier to translate that into actual P21.
Yeah, for sure. Well, I guess we should just jump right into it, huh?
Yep.
So,
and
go ahead.
And I was going to add, because Andy did mention that this came in because somebody reached out to us, and we're, because we have a list of like 40 topics that we want to get to. But if somebody reaches out to us, we can't always guarantee that, that'll necessarily be the next one that we're going to do. This case, it kind of worked out to us because it kind of came up when we were trying to decide what was going to be next. But we definitely try to move those up earlier or further up on the chain just so we can get to them. So if there's something you guys are struggling on and we haven't covered it already, or a different part of it, just, comment on the video or whatever, and we'll look into it.
Absolutely. Yeah, we're happy to do it. We love the feedback. If you have questions as we're doing this stuff, put them in the chat. That's what this is meant for. This is for you guys as a community. This isn't for us. We go through this stuff on a daily basis, and we see a lot of the same struggles on a day in, day out basis. So this is kind of our attempt to deep dive on it. Even it's hard to really have a good solid knowledge transfer on topics. I mean, if you think about like the main part of our YouTube channel, our tutorial videos that Matt has done a lot of, they're 3 to 5 minutes. max. We're trying to get you in, get you out, get you through a specific task. I've been active historically in doing like talks and stuff with the Worldwide User Group. But even then, the longest session is 90 minutes. It's really hard to cover topics in detail in 60 or 90 minutes. And so we wanted to do the live stream because that gives us up to 4 hours, if we need it, to really get through all the intricacies of a particular topic. And even then we've had two-parters because things like purchasing, you're not going to get through that in even a 4-hour block. So anyway, that's kind of the spiel on how we got here and why we're doing it the way we're doing it. So again, please interact with us. Put a chat in the comment. Just let us know you're here, So where are we starting, Matt? I guess we're going to start in system settings.
Right. The only settings that I want to focus on here is under the inventory management general tab. There's 3 checkboxes that pertain to, and they're right underneath the default item category thumbnail there, or bare about there. So include multiple landed cost drivers per category per driver type. It doesn't force you to do it. It just allows you to use multiple. I don't know how else to really explain that.
Yeah, I think that the use case that I've seen on this is when you have, a driver type like duty or stuff like that. Hey, Mark, we appreciate the question. So we really don't teach programming. It's, and that's, we have never gone down that road. It's very difficult to teach people how to do programming, and we're not really set up for it. We're set up to build the tools, and that's what we like to do, and that's a big part of our business. So as such, we've kind of stayed away from teaching programming because it's just not something we're really set up to do. And quite honestly, the way that we do it might not suit how another person wants to do it. We use a lot of libraries that we've developed over time and things like that. So the way that we do it just isn't, it's not by the book per se. It works great, but it's not the base layer of how to do it.
And plus, when you get into more complicated things like that, where you can actually damage your system, that's not really something that we're just going to be putting out here on YouTube that somebody can go in there and just start
that too,
banging it. Because you can do even like adding a related table with a SQL join statement in DynaChange. Speaking from personal experience, you can break screens real easy.
I was able to unwind it. I mean, fortunately, you were on premise, so it could be unwound. but anyway, no, we appreciate the question. It's just not somewhere that we're really prepared to go. So anyway, so on the multiple landed cost drivers per category per driver type. So what we're talking about here is, and you'll see as we start to set these categories and drivers, they're going to have different types, and so this is really about enabling or preventing that functionality. I think one of the use cases I've seen for it that I like is when you start having layers of duty and tariff. So you may have a standard duty on something, and that's going to be, that's going to have a category and a driver type. But then you may then have a tariff or, oh gosh, I really got to reach back here. So you could have a tariff or a countervailing duty that may layer on top of the regular duty rate, and you need to be able to split those because they either get paid differently or one goes away after a certain period of time or whatever it is. So that's like my first top of mind use case for having multiples.
I would say it's most common that I've seen that actually enabled.
Yeah.
The ignore zero landed cost drivers.
I have actually I have actually set systems up to have a zero landed cost driver on purpose.
Yeah.
So here's a great use case for that. So again, a lot of this, guys, my background is is import-export. That was something I did for many years, and was on the supply chain and compliance side of that. So this is an area that I do have some firsthand knowledge of in my background. So all of that to say, zero landed cost drivers are great to add as a default when you know there's a pretty high percentage chance that you're going to get hit with something. So right off the top, the first one that would come to mind is an inspection fee at the port. So you guys, if you import a lot, every so often you're going to get popped with some add-on fee. It's not going to be there on every shipment, but if you get a customs inspection fee or something like that, it's nice to have that zero landed cost driver there that you can go in and put a value on it before you receive, and then just go ahead and build it in. So it's kind of like I can consume it when I need it, but if it zeroes out, it's fine. So that's a good one.
Obviously, the allowed negative landed costs allows negative landed costs.
That one, I don't think I've ever actually used negative landed cost. I've never seen something get cheaper the more that you do with it.
Yeah, I'm actually a little confused on how to even do that per se. So.
Yeah, I mean, I actually don't. I really don't know what the use case for a negative landed cost driver would be. That's not to say that there isn't one. I mean, it's there. So
I don't even know if you can set up a negative. I'm almost wondering if it's a negative as far as
it calculates to negative.
Yeah, I don't know. I really don't know. So I would say at this point, I've never seen anybody use it. If for some reason, if you do use it and you want to message us about it, sure.
Yeah.
But we're going to pretend we don't need that.
Sounds good to me. Anything else in here that we want to hit?
No, there's not really a ton of actual system settings for landed costs. The other settings are in your company maintenance and location driver maintenance. But what we're going to jump to next, though, is we're actually going to jump to the landed cost category. And we want to do that before we go into company maintenance, because you have to create your categories before you can assign them to your company.
Yeah, I don't even know if we have any set up. I was just going to check.
I doubt it, because I know in my system, my video
system,
system, I had none.
Okay.
So I would say let's just set up a couple different random ones. And all this is just giving it an ID or code and then giving it a description.
So I'll set up a few that just come right off the top. And I might be doing this wrong. It's been so long since I've set one up, but we're going to try it anyway. It's 1 R and 2 Fs, right? It's all that one always messes me up. It's right up there with vacuum.
You're asking the wrong guy. Set something up for transfers.
Okay.
I don't know what you want to call it, but
and
so my background
throw in there too, because
we used a lot of location to location because we had our own trucks, and so if one of our locations requested some inventory from another one, the source location staff had to pick and load and ship, and so we wanted to pass on some of that calculation for our fuel chart. We had actually two. We had one for fuel and one for labor.
Mm-hmm.
And that was just calculated based on each location. So anyways,
yeah, I'm kind of surprised on that. I mean, this is kind of a side quest, but that's kind of our thing anyway. So on that, why didn't you guys just go with a general markup on transfers?
Because the general markups on transfers, I believe I remember correctly, were just a blanket.
Yes. Yeah.
Whereas landed costs allowed us, because labor rates in Miami are way different than labor rates in Birmingham.
Okay. Now I got to fact check it because I don't remember.
I'm pretty sure that's what it is, because it's under transfer days maintenance. I don't believe, and you can't break it out. It's only one thing or something like that.
You can't break it out amongst multiple things. I agree with that. And you're right. It is a percentage, but it's a percentage that you can apply on a pairing by pairing basis. So you can set.
Right.
I'm getting way off track, aren't I?
Well, but here's the other issue with this though. With landed costs, there were some things that we didn't want to charge,
Okay.
and so we were able to clear those out, and we'll show you what that looks like in when you actually go to ship something. So, like on machinery, we intentionally housed machinery in 1 or 2 locations because we didn't want to spread it out across. So we didn't hit them with a fee for that because that's a cost the company's just accruing at the corporate level because that was
that makes sense. So you guys needed
flexibility.
You needed some granularity there in how and when it was going to hit. So I think that's a great use case. But for those of you that are out there that are just trying to figure out quick and dirty way to get a blanket percentage between locations or some blanket whatever between locations for transfer markup, check out transfer days maintenance. And there's, I think, a company setting for this as well.
Yeah.
But this does give you a mechanism to load the cost of the transfer into the cost of the product.
It does, but also with, and we'll get into that when we get to the actual land. There's more options, whereas this is just a markup off of a price source or a cost source, where in that one you can either do it by units, you can do it just per transaction, you can do it, for this much amount of money per this much amount, so it gives you more flexibility. But if you're just trying to do a down and dirty 10% markup on everything you transfer day maintenance will cover that. It just gives you more flexibility on the landed costs.
And really, I wish I would have thought to bring this up at the beginning, and I hate jumping into this subject in the middle, but I put a string marker in so we'll be able to find it.
We do it all the time. It's fine.
Yeah. But, the whole point of all of this is truing up your inventory cost as accurately and as at a granular of a level as possible.
Yep.
For the purpose of making sure that your inventory is, number one, valued properly on your books. And that, number two, you're making decisions about gross margin based on reality. And so in instances where we've consulted on this topic, we've gotten into these discussions where like what will happen is there's a journal entry done, like they'll have like an inventory freight account or something like that. And so what happens is all the inbound costs is you journal that into that asset account, and then as you burn goods off, you do a journal entry to expense the freight out based on a percentage. A lot of customers do that. I'm not saying there's anything wrong with it, but the problem is you could be in a position where your rank and file users don't really understand that that's what's going on. And so they think that they're selling at a 30% margin, but the reality is you have 7% of freight cost in there. And so when it's all said and done, just off freight alone, that's cutting your margin to 23%. And so you can kid yourself into thinking that you're making more money off this stuff than what you really are. Whereas if you look at landed cost, what you're doing is you're getting the cost into your inventory on a transaction by transaction basis in the moment that you receive it. And then if you're marking that up 30, it's really 30, right? Less whatever your shrinkage and stuff like that is. But at least you're starting from a position that's more in parity with reality.
Right.
And you're also correctly valuing your inventory, which that's a whole
yeah, I mean, we've seen people, I've never understood this, where they're basically fooling themselves on what the cost of their actual inventory is. It's like you're not hurting anybody but yourself. Or I hear the phrase sunk cost thrown around. Well, we're already paying for it over here. And I'm like, yeah, but you're paying for it over here because of this inventory. So
every time I hear sunk cost, I think you're talking about the cost that's going to end up sinking you. Yes, I agree.
One other thing I do want to add when we're talking about capturing that inventory cost is landed costs doesn't necessarily, like, there's already built-in functionality when you do a PO to voucher to disperse the freight costs into items. So you don't need to set up a landed cost to do freight costs because it'll do it. It does it poorly, mind you, because it only gives you an option of weight or units, which depending on what you're buying can be weights or weights or units, which can be very. We had that problem because something, it would like try to even out the what it's giving, whereas we wanted it based off the unit cost. So the higher item prices can absorb a little bit more of that than, 50 cents on a 20-cent part for freight is going to make that part
I've seen that problem huge in industrial distributors, just like general industrial goods, MRO type stuff. And I've seen it also huge in fastener. And the reason that those two industries suffer from it probably disproportionately from maybe other verticals, which is not to say that they're the only ones that have that problem.
Right.
A lot of industries have this problem, but they really have it because if they buy, like on the fastener side, if you bought grade 2 bolts and stainless steel bolts in the same go, your grade 2 bolts are going to get, whether you go by weight or quantity, it doesn't matter.
Right.
Those grade 2 bolts are going to get hit for freight a lot harder on a percentage basis than your stainless ones will, just because you're talking about, if I have a $100 freight bill and I have 2 lines and they're both quantity 100, then I'm putting $50 of freight on each. So you're talking about putting $50 of freight on $100 worth of goods and then $50 of freight on $400 worth of goods in the same go. And you're right, that is a big problem. Now, we had a customer, I don't know, maybe 2 or 3 years ago, where we actually built an add-on for them to fix this. We put a button in convert PO to voucher, I think.
And you built that for us.
Well, then we've done it twice because I know
we did. That's right.
Yeah.
We did. You're right. Because that's where we got the original idea from.
Yeah, and basically what it allowed you to do is you would put your freight in, you would hit this button, and it would reallocate the freight cost based on the extended cost of each line being received. Point being to spread that freight cost equally based on the value of the product, so that everything was taking a 3% hit, let's say.
Right.
So that I thought was a really good way to do it. And there's been other things that we've done as well with domestic freight. So they're not really edge cases because they happen every day, but they're kind of idiosyncratic where, like, you have these transactions that can blow out your cost almost on accident, because let's say, for example, you have to do expedited freight to take care of a customer on an item that you don't really stock a lot of. Well, that expedited freight bill can murder you on that one item for margin. You can end up in negative margin, which is it's like, yeah, it's true, but in the grand scheme of a large business with a lot of moving parts, you have an expectation that there's going to be some amount of that going on, and you don't want it to necessarily blow up the cost of a single item, because what happens is, especially when your salespeople are getting paid on margin, that starts to creep into their head, and then all of a sudden what you have is someone whose job that, your vision of their job is, I just want them to take care of our customer. I want them to sell and take care of our customer and make a good markup on the product. All of a sudden you're accidentally turning them into a cost accountant. And because they're trying to do the mental gymnastics to figure out, but the freight is going to be this, and that's going to do this, and now I'm not going to make any money on this sale, and that, I just don't want that in people's head. And so, you can use landed cost as a way to combat that. And the way that you can use it is to say, look, here's what we're going to do. We're going to take the average freight to inventory value for the last quarter or the last 6 months, whatever that percentage is. We're going to set up a landed cost driver, and it's going to hit every PO receipt. So let's say that's 3.6%, right? So every PO receipt's going to get hit 3.6%. You're going to win on some, you're going to lose on others. But the point of it is you're going to have an extremely consistent quoting mechanism. Like, if somebody tells you, hey, I'll sell you that for $100, then you know that it's going to hit landed cost for $103.60. There's no ambiguity, and you can quote based on that. And then what you do is you true the driver up. You look at the amount of freight that you incurred in the last quarter. You look at the amount of landed cost that was applied to your products. And either you took out too much or you didn't take out enough. You make an adjustment to the percentage for the next quarter and you move on. Things like this keep the cost accountants doing cost accounting and the salespeople selling. It irks me to see people getting wrapped around the axle over things that, like, you shouldn't even be worried about this in your job because it's affecting your viewpoint on how you take care of your customer. And I think landed cost is a way that you can transfer that responsibility up the chain into accounting where that responsibility ultimately probably should be. Because I don't want receiving people thinking about it. And I've got stories for that too. And I don't want salespeople thinking about it. I want my salespeople selling. The best way to grow your business is to sell more stuff.
Yep.
And make it profitable. So anyway, does that count as a rant? I feel like that counted as a rant. Okay,
yes.
good.
We are 30 minutes in and we already hit.
All right. We are on our rant quota target. That's awesome.
Yeah, we are good now.
What were we talking about?
Well, we created our landed costs
categories. That's correct.
Yeah, landed cost category. So now we need to go to company maintenance to do the rest of the setup for landed costs. Which, if somebody would uncover the list for me real quick so I can remember. So there's 3 tabs in particular. Now, 2 of them only get lit up when you actually have landed cost categories created. And once you do that, they'll become active. But the first one's inventory. Basically, this is going to be deciding the landed cost GL account.
Yeah.
Where that money's going to go. So accounting can true up that stuff. And there's also a post landed cost variance to inventory cost when you're converting landed cost to voucher. You might be able to. You're more of the CFO mind.
So this kind of gets into, as best as I can recall, remembering that I have not done a full-blown landed cost setup in probably 2 years. And I've thought about other things since then, believe it or not. So, but anyway, I think at a high level, what we're talking about here is there are going to be instances where you're not going to be able to get all of the landed cost onto the product. Why? Well, you brought it in, you received it, you didn't get all the bills for the landed cost, right? So let's start right there. Landed cost, in reality, on a lot of stuff, is an estimate at best.
Right.
So, for instance, if I'm like, some things are you can be extremely accurate with. You know that duty is 3.2% on this line of products based on extended cost. You can create a driver that calculates that to the penny, and your variances on duty are going to be very, very small. If you have contracted rates for sea freight, you can probably be fairly accurate, but maybe not. There's going to be surcharges, bunker fees are going to change, things like that are going to happen. So, you can be a little more holistic and say, on par, sea freight, we're going to go in with a landed cost driver of 8%, 8.1%, whatever. Because on par, that's about what it ends up working out to be. Or X amount of dollars per pound or ton or whatever. So you can do that. But then you're going to get into things like drayage and fees and customs clearance and clearance you should be able to be pretty accurate with. But but you're going to get into things that have some variability. And if the product is in stock, you're usually pretty okay, because P21 is smart enough to figure out, here were the products, and I need to go back and hit the inventory on those items in those quantities for this amount to true up the landed cost when I convert landed cost to voucher. But in so many instances, you receive the product, you ship it, and you still don't even have all the freight invoices yet. Then what happens is you figured the freight on your landed cost driver was $250 for drayage. It ends up being $350 because they had to hit you for a triple axle chassis or something like that. And that 100 or 150 bucks or whatever it was, that's got to go somewhere. It can't go back on the product because the product's not there anymore. And so that's when you get into scenarios where you start having things hit your landed cost variance. I think that was a lot for one checkbox, Matt. I mean,
yeah, but there's nowhere else. I mean, you have to recognize it somehow. And,
absolutely. I mean, everything has to balance, right?
Yeah. So again, your controller, somebody in accounting should be making these decisions right here.
Yeah.
Even though it's under the inventory tab, which I get why it's under the inventory tab, but it is everything under the inventory tab and company is.
It's really about accounting.
Yeah.
It's really about how your inventory affects your books.
Right. It should be inventory costing or something. So there's two other tabs. There's lost
sales. Hey, we already did that one.
We already did that one. I saw lost sales. So the reason we created our categories first. Why is it not in there?
I may have to log out and log back in.
Did you already have company maintenance open?
Yes.
Oh, you have to close company maintenance, close and rebuild.
Have you tried turning it off and back on again?
And this kind of demonstrates the reason I was saying this is you have to have those cost categories created first before you open up company maintenance, so it will enable those tabs once you pull up your company. I don't know why. Like, it's not like they're grayed out. They're just not on the list at all, which is weird. Like,
well, see, I opened company maintenance first so that you could explain this and we could demonstrate it
perfectly. So really, what we're going to do here is we're saying. Because when we set up the categories, you notice there was no company setting. There was no location setting. So you have to tell the system, these are the categories that this company is going to use. And so you essentially just have to look them all up and add them on there. So you can go ahead and do that.
All right. So, yeah, I'm just going to.
And I don't know if there's a way to, I don't think there's a select all. I think you just have to add them one by one. There is no location specific categories. It's all company specific. Now your drivers can be location specific. But the ability just to use these has to, nope, we're not done. Why? Go back in.
I'm sorry. I fixed something in the system and I save it. This comes from gaming. Okay.
I know.
That's where this comes from. It's when you forget to save as you go along, and then you get into the, knockdown, drag out boss fight, and now you're 6 checkpoints back because you forgot to save. I
know. I've been there.
Okay.
F5 on my keyboard when I play. So we're going to that's all we have to do here. We're going to go to the landed cost driver search order. Now this does 2 different things. One, it not only affects the search order, which I'll be honest, I still don't 100% understand what it means by search order, but in order for these to be selected when we create them, they have to be moved over to the right side.
So I think what this boils down to is like how they're going to hit. Like, it's almost, think of it kind of like price pages. Like when I get a hit on this category and driver type, it's going to supersede the next one.
I got you.
Most of the time, I try to set it up where I only have one in each category, so I don't really have to worry about that.
But in order for us to set up drivers, we have to put things over to the selected side. I would just select all, just so maybe here we can kind of review them, because you won't be able to see them on the driver side, just because It's one of those drop downs, so we won't be able to go over the whole list of available ones. One thing I want to call out real quick is you notice the location to location already has it set to select, or like it's got that already selected driver type. It's because you have no other option other than transfer receipt for location to location. So it locks you to, and you'll see that when we go to create it, where all these other ones, even if they're not necessarily transfer related, they can be triggered off when they get transferred for some reason. Like if you transfer something from a supplier to another location, you can trigger a landed cost. But location to location, you can only do transfer receipts, which is why that's automatically enabled. Really, all this is, these are just the things that you can apply a landed cost by, whether it's a combination of a supplier and carrier, supplier and location, or just an item ID, or everything comes into this company. It's just the way you're going to apply those drivers.
So I'm going to tell you, as somebody with, who's been down this road before, there is a category that's missing, and missing huge.
Which one's that?
It is the combination of like product group or item, or some item related attribute, and country of origin. And that crushes you when you're trying to do duty, because you can import the same item from two different suppliers in, or same ranges of items, right? That all have different duty rates, because that's really based on the country of origin. China may have a different duty rate than India, or there may be, some.
Well, you'd have to set one, like if that supplier's in India, you'd have to set up a supplier and a country of origin for them in India. And then for the one in China, you'd have to set up one.
The way that I've done it before that worked out pretty well, because no one ever uses this field, is manufacturing class. So we set up manufacturing classes for the items that were a combination of the HTS code. Then like it had a suffix for the country. So we would have like 7307 blah 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 -IN, 7307 blah 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 -CN, or -US, because that would have no duty. And so we used that on the items, because you can select that at the supplier item location, or supplier item level. That's where manufacturing class is. So it gave us a way to say this item from this supplier hits this manufacturing class. And then we were able to use the manufacturing class to accurately determine the duty rate. So this is just like kind of an FYI. If you get into this and if you're doing a lot of importing, and especially if you're getting the same items from multiple countries, that is a way to kind of get through that issue. Okay, where to next, man?
That's really it. In the, again, I'm not going through moving up which one's more important and all that.
Yeah, that truly is going to be player's choice. Yeah.
And something to keep in mind, and I guess it goes without saying, you can apply multiple landed cost drivers to a transaction.
Yes.
If you have one set up for a particular customer, or not customer, a supplier, and you have one set up for, that one's combined, or a supplier and a company fee, you can have them even though they're not a combined category. Here for selecting it, you could still trigger them individually, but it would be everything within those. So it gets a little, I don't know that many people get that in the weeds on it, but
you got to be doing a lot of heavy complex transactions to justify it. But I mean, that's kind of our thing around here, right? Complex stuff. So that's why we get into these kinds of things. So, but having been through it with a couple of importers and doing it a couple of different ways, this is a feature I actually feel pretty solid about. Like if you can find a way to get your head around how you want to deploy it in your organization, it will usually work pretty well for you. I don't think we've ever had anybody. No one's ever come to us and said, "Get us out of this," and we've never done it and then had it undone after the fact to the best of my knowledge. Like typically once people get this set up and working the way they want it, they stick with it. We don't see a lot of people
No, they may
jump and
adjust
ship.
it.
Yeah.
Because there is, and again, the next part we're about to get into, which is the actual main meat and potatoes of setting up a landed cost. There's a lot of different options, and it again, shocking. I know there's some things I like and some things I really don't like.
That's so weird.
It never happens. But yeah, I mean, the setup is not difficult from, like I said, it's a little convoluted how you have to jump through hoops to get to this point. The complexity is in how you decide to use them once you actually start setting them up and understanding what you're doing.
For sure.
And I'd like to, like, I'm gonna have you set up a location demo one,
Okay.
just because I feel like it's one of the easiest ones
To kind of understand how it's going to work.
to understand, because we can go into the ledger on an item and see it leave one location at one cost and come into another location. So once we get done through our setup, probably we'll take our break, and then we'll go through and actually show you how it works in P21, like
Cool.
how it actually hits.
Yeah, that works for me.
So let's go to landed cost driver maintenance.
Okay. Lead the way.
Sorry, people. All right. So our driver is going to be our ID that we're going to name. I recommend making, and these are company specific. So if you did have multi companies in here, you would have to set one up for each company.
Yeah.
They can't be shared. Make it, you do have a description too, but also make it make sense.
Yep.
And this goes back to what I said about writing it down first. Come up with your naming convention. So if you're doing a bunch of these, you're easy to figure out what they are, especially if you see, because that landed cost driver is going to show up in the database. So you want to be able to say, oh, why is there a $13 fee on this? Oh, well, it was the freight from location 10 to 20.
You said you wanted to do this as transfer, right?
Yeah. So again, he's just picking one of those. Now these, you can't see it in the drop down, but these are all those options.
Yeah. So that's your carrier location, carrier product group, location to location. That whole list that we added on the second tab. That's how you figure out what's in this drop down.
Right. And you'll notice location. You see the application point down there? That's what it pre-selected for us. See how it's grayed out? It says transfer receipts.
Yep.
If you select a different cost driver, there's a drop down there for PO and transfer receipts.
Yeah, and I mean, a location to location driver by definition is for transfers.
Right.
That's why they're pre-selecting this for you.
Right. And there's a bunch of fields on here, but obviously the only ones that are going to light up are going to be the ones that based off of your driver type.
I'm probably going to regret this.
Oh yeah, it's good. Oh no. So this is one of the only places. I'm glad you did that because I totally forgot about this. This is one of the only places that I've seen this happen in P21. It will let you rename these at any point in time. Yeah. I've never seen it anywhere else in P21.
Yeah, I can't think of anywhere offhand.
So yeah, if you and the reason I know this and I forgot about it. We didn't fully write out how we wanted to name all of these. And so once we decided after I had created about 40 or 45 of these, I had to go back and redo
them all. Yeah.
Redo them all. So anyways, so obviously all these other fields are grayed out because we only are concerned with location to location. So you do your source and your to location. If you need it the other way around, you have to create a separate driver for that.
Correct. That's no different than transfer days maintenance, right?
Right.
Like
Yep.
you have location pairings and you have to have one for each direction that the pairing can run.
So here's something this is going to be my thing I don't like about driver maintenance. You'll notice that the calculation method and the per, it's always dollars. or cents. There is no 10% here. So if you want to do a 10%, what you have to do is you have to go to extended cost. No, I'm sorry, not extended cost. Go back. It's amount, or where is it?
And just look again. We know you guys can't see the drop downs.
Right.
That's just a function of how.
Yeah.
I actually don't know why that is, but your options here are default purchase unit, default sales unit, dollar amount per, extended costs, receipt, volume, and weight.
I can tell you why, because it's considering it a second window, and you're
and I'm sharing the window because what you guys can't see is our outline is right next to it, and as we're trying to keep some stuff backstage here with all the production.
So if you want to do a percent, which is what a lot of people will do for this stuff, you want to set it to dollar amount per. And what you would do is you would type in 10 cents. So if we want to do 10%, we're going to type in 10 cents in the calculation method. And I hate that this is the way you have to do it. And then it's going to be per $100. So basically what that's saying is I want 10% for every 100.
10. Well, that's 1%.
No, I'm sorry. Dollar. It should be $1. Should be $1. Sorry. There you go.
There we go. 10 cents on the dollar.
10%.
So that's how many dollars per dollar.
Yeah, I don't like that. That's the way that if you want to just do a straight percentage, I don't know why it's that way.
Well, I actually, and this takes a little bit more mental math, but I tend to gravitate toward a multiplier against extended cost. I think that one works really well. Mm-hmm. The only problem is people will make it at 1.25 thinking they've marked it up 25%, and that's actually not how that math works. Right. You've got to go, and it's a cross multiplication thing, but you've got to get it to like 1.32 or something, or 1.325, I think, to get to 25%. But multiplier, if you can reverse engineer the percentage that way, that works too.
Agreed. So that's really it. Now, I will say one thing that I've never played with on this is the tax driver part of this.
That's the same here. I have never really messed with tax drivers, so I've never had occasion to. The people that we work with that have highly complex tax scenarios are usually using that. Like, there's a third-party tax solution involved. So I would not be able to speak too intelligently about tax drivers. I've just never really messed with them.
Yeah, and we'll be on, like, anybody that's watched these ever knows we never claim to know everything about P21.
No,
I don't think anybody really does. We will tell you what our strengths and but we can click buttons as well as the next guy.
Absolutely, sometimes better.
So that's probably the most simplest, straightforward way to set up a landed cost driver. Do you want to do something for PO receipts so we can also demo that when we're ready?
Yep. So that's that one. And so let's just do like, we're going to do something kind of like domestic freight. So we'll do freight, domestic, all locations. So let's say domestic freight cost. And that's going to be, I know I put ocean freight, but just bear with me. And we can hit this one at the company level, right? And so we could say that this is going to be, we're going to do a multiplier of 1.05, which is going to be roughly 4 point something % against extended costs. So basically what we're saying is every dollar of extended costs we incur, we're going to mark it up 4 something % to cover this. So yeah, and we're going to apply that at PO receipt.
I hate the way the math works.
I do too. I wish they would give us a markup option, but some other things to look at too is like if you have, if you have, let's say a drayage cost of $250 per container, right? This is where it becomes useful to know generally what your container loading is. So like if you're generally getting the full 40,000 pounds, you have really dense freight. you can say, okay, well, 40,000 pounds and it cost me $250. You can work back into a cost per pound for drayage or for ocean freight. And you can say, okay, I want that to be 0.072 cents per pound or 7.2 cents per pound for drayage. Now your weights need to be accurate in your system to make that work. Caveat.
That's a whole nother thing.
But then if you have things like customs clearing, well, that's usually a flat fee per transaction. So like your custom house broker is going to charge you $150 every time they do an entry for you. And so you can say, okay, well then I'm going to set this to $150 per receipt.
And then it just now the downside to that is it's going to split it up amongst. It goes back to the way it does freight at PO to voucher. It's just going to divide that, right? Like
yeah, it's going to just spread that $150 across everything. So again, play with these obviously in a pre-production play environment, whatever. But for this, I think we're just going to keep it kind of simple, and we'll just do let's make it 1.1 because that'll be kind of easy to see how the math works on that.
And don't go in here and set up 500 of these.
Yeah, do something, see how it works, and go from there. So by setting this at the company level, what we're saying is this is going to hit every single PO receipt at every location the same way. Now, obviously, you're going to get into scenarios if you have multiple locations where it's like, well, but it's only 4% at location 10, but it's 5% at location 20. That's fine. You can do that. Mm-hmm. You set up a location-based driver, and you say at location 10, it's going to be one value, and at location 20, it's going to be another value. So you can absolutely handle it.
Now keep in mind, if you set up one that's a company and you set up one that's a location in the
they're
same
gonna
company,
stack. Yeah,
they're going to stack. So
yeah,
and that's why, like, go in there, pick a couple that you want to try, and see how they. And we'll go through that. Actually, you know what? It might be cool if we can set up so on PO receipts there's two different ones that hit.
Sure.
Just so they can see how that's. So let's save this one, and then let's do one for on the supplier.
So let's do.
I don't know what you would call it, but yeah, there you go. Surcharge.
So this is a supplier processing surcharge. I don't know. It doesn't matter.
Whatever. And again, obviously, if this is for a specific supplier, you would want to put that in your description somewhere.
Yeah. So we're going to set this one as supplier level, and this is going to be. I know I set most of these up as, import centric, but bear with me.
And really all that category does is allows you to, and the fact that we're allowing multiple categories, it doesn't lock us out of it, but it also allows you to, when you're doing reporting, when you're doing all this stuff and how it hits your database, it's identifying what type of fee it was.
So in this case, what we're saying is that supplier 10001, they charge us a $50 processing fee for, everything. Or there's some, maybe we're using a hotshot service or something like that, and they charge us for anything coming from this supplier. It costs us $50 per to cover the hotshot, whatever it is. You can be pretty creative with this stuff. All right, those are in. So before we start getting into the transactions, this is a good time probably to take a quick break, about 10 minutes.
Yep.
So we're going to start the counter at 10 minutes. We will see you guys back here, and we will actually start doing some transactions. Oh, goodness. All right. Well, we're back, and I guess we're ready to stop ranting about things that don't need to be ranted about.
Yep.
There's plenty of channels for that.
Yeah. This is not it.
I don't know. Is it possible for an unmonetized channel to be demonetized? We could be the first.
Consider.
All right. So now we're actually going to start getting into looking at how landed cost is going to hit and how it's going to work at the transactional level. Where do you want to go? I guess we need to start putting POs in, huh?
Well, let's do a transfer one, because I think the transfer one's a quick way that we can then go into item master inquiry, and you can see an item leave one location at one cost and it come into another location at a different cost.
Okay.
Using one of my favorite tabs, the ledger tab.
I'm really struggling to type here.
Transfer.
What's a farger? Okay. Sorry, man. It's like my favorite set of movies. Maybe that's what we should do with the live stream. Like, every live stream is themed after a movie. That could get out of control really quickly.
All right, so we're going to go 10 to 20. I don't care what items you put on there.
Well, you know which one I'm putting on there. The same one I use for everything.
Now, once he puts this on there, we'll see the landed cost tab light up. So we can actually preview. And at the bottom, it's by item. And at the top, it gives you the rolled up by, if you up at the top in the header. So if you had multiple items, it would tell you for this transfer, you're looking at a landed cost of $20. And it's based off of, because we're basically doing a 10% markup on per dollar.
And this, if I'm not mistaken, good, bad, or indifferent, is editable at this point.
One of the first things I was going to bring up to you is we ran into an issue where people figured that out.
Okay,
and
I'm just going to tell you, before you say another word, that is not a P21 problem. That is a we need to get these people out of the organization problem.
Right.
And I know that that's not going to be a popular opinion, and I know that people watching this later on or whatever may go, wow, that seems harsh. I'm telling you right now, if you have someone in your organization willing to manipulate this over $20, they will steal from you given the chance. It will happen.
I mean, they are stealing from the company. And the problem is it could be a sales guy, or it could be even a location branch manager that gets commission based off of profit, or gets a bonus based off of profit.
That's theft.
And I don't know, and we can test this. I don't know if the audit trail records it if somebody does make a change to it.
No, I don't know either. But now, having said all of that, excuse me, there are good reasons to have this editable.
Right.
And we'll get into when we start. I don't know if you have vessel receipts on here, but I'm going to spend some
I
time.
don't, because it wasn't one of the ones that I was super...
Yeah, no worries. I think it's something that we can just talk about closer to the end, but I do want to get into that, because you have to do things in a way that's kind of counterintuitive, I think, to get the max flexibility out of it. But that can wait. So, okay, moving on. Sorry, didn't mean to derail. You were doing such a great job.
So it does, you can preview it up front and seeing how much it's going to be. And again, this is for the whole transaction. And we're going to print this form, and then we're going to go to transfer shipping, because in a transfer, you can see it at entry. So there's 3 chances to adjust that. There's at entry, shipping, and receiving. So you have 3 opportunities that somebody can edit it. And again, there are business cases where, okay, I trust my people, and again, sometimes, and the reason we had it, we actually created our scenario is a little different, because we did transfers different, because I don't like transfers in P21, but that's a whole nother meeting. So you'll notice the landed cost there. again, it's all editable. There's no permissions for that, I don't believe. I think it's just editable. Now you can obviously dyna change it. You could do some business rules where they have to have, you know, this
certain
UDF
role or something like that. Yeah.
role that can edit those. You can actually add extra landed costs that aren't there as well, that don't come naturally.
Okay, so yeah, and I'm glad you brought this up because this goes right to the heart of when we were talking about this, setting up the default zero base landed cost drivers.
Mm-hmm.
So yes, you can technically add them, but to me, it's one of those, oh, I have to remember to add it things.
Right.
Whereas
it's already
if it's
there
in your
zero.
face at zero, oh yeah, we've got inspection fees on this. And you can also like make sure that it's controlled properly and things are getting applied correctly. So that's a good. I'm glad you mentioned that you can add them. All right. So do you want me to just go ahead and ship this? I'm trying to be extremely conscientious about what I click on today. So
You know,
I know I messed up a little at the beginning, but I'm
you're fine. I think we're gonna at some point because I made the comment I don't like transfers in P21. I think we're going to do a stream at some point on transfers. Maybe we'll combine it with something else because transfers aren't going to be a full blown.
I think if we combined it with Torg and transfer back orders.
Torg, yeah. If we did transfer back orders.
All right.
That's a trigger word. All right, so now we need to go receive this.
Transfer shipment number 3.
Mm-hmm.
No, that was not the right screen. Not even close.
Nope.
It's transfer receipt, isn't it?
Mm-hmm. Again, you have a chance. And now it does show you. So I guess it doesn't do an audit trail, but it does show you if somebody has edited it.
But that's good.
Yeah. All right, we're just going to.
We're good. We're receiving everything's good. Okay.
Yeah, transfers all pre-populate
with that amount.
Pre-populate, yeah. And so, lot. Sorry, doesn't do the lot automatically. What does the lot automatically? But it doesn't do the bin.
Maybe it would have if I don't even know if I have a default receiving bin on 20 for transfers.
All right, so now what I'm going to do is I'm going to go pull this item up in Item Master Inquiry for location 10 on the Ledger tab.
I F2'd that time.
I appreciate that. I could tell.
I guess we just leave all locations.
Yeah, we'll leave it wide open, yeah. And if anybody doesn't know the Ledger tab, it's one of my favorite tabs for researching and figuring out issues. There's some fields you may want to add to it with DynaChange. But you can see, do we not have costs on ours?
Well, we can add it.
Yeah, add unit. Oh, I forgot my video system. I added unit cost to it when I was talking about it, just because. Something unit cost, transaction unit cost. It should be a drag and drop one, I thought.
Yikes. I don't.
It might. Oh, it's gonna have to be. It's a related table then.
Let's see. New field.
Or sorry, not existing. Sorry, existing database. And where is it? Is there a Tran? No.
Probably
IMB
Tran.
There you go. It's fuzzy on my screen for some reason. And it's just it does the unit cost. There's no total. There you go. Unit cost amount. What I did on my screen in my previous life was I put that on there and then I did a calculated field to give me the total transaction cost.
That makes sense.
But I'm more concerned about the actual unit cost anyways for this purpose. But that would be my recommendation for the Ledger tab is add this transaction unit cost and then a calculated field that takes the transaction quantity and multiplies it by the transaction unit cost. That'll get you the total. F2.
How do you know I didn't press it and it was just waiting?
Because your mouse was just going everywhere. Unless you're trying to use your mouse to click F2.
I was, and I couldn't get the cursor that low.
All right, another tab. All right, so we can see it left 10 at $2.00.
Just under a penny, yeah.
If you change that to 20 up there, you'll see it come in theory 10% higher.
$2.20. Yep, it does. That's actually a really great way to look at that. And I agree. That is a really good way to understand kind of what hit how. I thought there was also a place where you could see, and I know there is, I just can never remember.
If you go to item maintenance, there's a cost tab. And in the cost tab, it shows you the last landed cost or something. Like it's some weird.
Yeah, but there's another place where you can look and see.
Oh, go to the cost tab. Is it right here to the left? Is it on here?
Yeah, maybe. And this may just be PO receipts. Yeah, it is because it's got vouchers and stuff like that. Okay. What about the transfer tab? This must just be open transfers.
Open ones, yeah.
Yeah, it'll either come to me later on or it won't. But transfer history. Yeah, there may be some cost fields on that, but I think there are screens where when you can look at a transaction and see how all of the landed costs hit for that transaction line. It may be just as simple as, it may just be as simple as going back into the transaction to look at it. I don't know, but okay. So that's transfer.
Yeah.
All right. So.
Like I said, it's my favorite way to start understanding how it works because it's easy to see the before and after.
All right, so this time I think what we want to do is probably enter two different POs. One for the supplier that has the driver and one for a supplier that doesn't.
Correct. I approve.
All right, so this... Seriously? Oh, it's because I'm picking the wrong number entirely. There we go. All right, so same thing. It's showing us what is going to happen. So we should get a $50 pop in landed cost on the PO, and then we should also get a 1.1 multiplier on the extended cost for the domestic freight. And I think it works the same way here too. You'll see it at the line level.
Yeah, the top's just going to show you everything rolled up into one.
Stand by. I thought I was going to have to sneeze. Didn't happen, though. That was weird. Okay. So we'll go ahead and save this one. And then we'll grab one more. Same item. And see, in this one, we've only got the one driver. So that additional one that we had hit on a per receipt basis doesn't come into it. So that's what I was kind of getting at earlier is like, yeah, it takes a little bit to get this all set up, but you can see on a transaction by transaction basis, it's doing exactly what we told it to do.
Right.
Okay. that one's good to go, and now we need to receive them in. We got a lot of stuff open here. Okay.
That was weird.
That was. It's like, yeah, I already had that screen. Thank you.
Did you click on the right one?
Probably not. No, I did. Miracle's too happy. I wasn't even paying attention.
Now, if you go to the landed cost tab right now, it's 0. Because unlike the other screens where it's pre-populating the quantities, the fact that you haven't entered any quantities yet, basically every time you go through and enter a quantity, it updates that tab. But it doesn't update it while you're on it. You have to go off of it and come back into it. I think there actually might be a right-click recalculate. I can't remember.
Show drivers. Oh, there's a recalculate landed cost. Well, let's see what happens if I change the quantity received. I didn't know that was there, man.
There you go.
Wow. Nicely done. Okay, so this is actually cool, though, because if we pay attention to this, right, and this is something to keep in mind when you're setting these drivers up. Let's talk about this receipt and how it's going to hit. So I'm going to set it to receive full value again, and we're going to recalculate. And that'll be how we start the conversation, right? Okay, so this is exactly what we said we wanted. We wanted 1.1 against extended cost, and that's exactly what we're getting. We also wanted $50 per receipt. Well, think about that for a minute. What if we get short shipped? So if we get short shipped and it goes down to 400, it's still $50 per receipt, and you're going to get hit 50 again when you receive the balance. So again, these are things that, like, it seems like this is the way I want to set this up, but is it really? The best, well, no, I'm still going to wait till we get to the end, because import and ocean freight and all of that really is its own thing. So anyway, I'm going to go ahead and receive it full, but that's, again, these are things where you want to be sure that you're thinking through this stuff. And you don't this recalculate, Matt, unless, correct me if I'm wrong, this is just for you to see it.
Right, yeah, I was about to say, before, you don't have to recalculate it. It will do it when you leave the tab or when you save. It's only if you want to. I don't know why it doesn't just recalculate automatically, because it should.
Yeah.
But I digress. It is nice that it's there.
Yeah, and so is the extended info on a landed cost driver if you're really trying to understand, especially if you're coming back into this transaction after the fact because you feel like something went awry with how the cost was applied or wasn't applied. This gives you some ability to look and see exactly which driver it is and how that driver is set up without having to go do a ton of research or whatever. So I do kind of like that. All right, so we're going to go ahead and receive it. Of course it doesn't. Wow, who set that up? We did not. We failed to unravel this horrifying thing.
And luckily it's not an item that we use all the time.
We might need to go back and fix that.
Yeah.
That ain't going to be cool.
Did we leave anything on serial numbers too that's going to bite us in the butt at some point?
I certainly hope not. Okay, and then we had, I think 12 was the next one. All right, and again, we're looking at our landed cost. This time, it's just the domestic freight. So when we receive this, we get exactly what we think. And this application of landed cost is going to scale perfectly because all of it works back into a percentage of the value of what you're receiving.
Right.
All right, I don't think I need to do anything else there except suffer through this screen, and oops, and here we go again. Just pencil whip it and move on.
Yep. And I don't know if you can you remove a lot attribute group with inventory on hand?
I believe so.
Okay.
Let's find out.
Yeah, well,
that's a side quest worth taking.
I didn't even see the exclamation point over my head.
That sound from World of Warcraft is forever burned into my memory.
Yep.
I had a t-shirt at one point where the shirt just said level ? Human. Let's see.
It's probably in your history, I would think.
It's not like I need it. Goodbye. All right. Hopefully that saves us from that nightmare. Back into the ledger again. And so you can see exactly what's going on here, where the first receipt that we did, which was for, I think that's where it is. I think you would look at it in receipts. I'm going to copy that receipt number. Ugh, that's yucky. I'm not getting done what I want to get done. Probably because... There we go. All right. So you can see this one hit with a slightly higher unit cost amount because we had that extra $50 on there. And I believe what I was trying to remember earlier was if you go back and pull that receipt, you're going to get that very clean view, uneditable and all that. But for research purposes, this is also a very good way to see exactly what happened on a PO receipt because, I mean, transfer receipts, whatever, but a lot of your landed cost typically is going to run off POs.
Can you pull this item up in item maintenance? Because I want to take this a second to look at, because I got a little confused when I was trying to understand what it was trying to show me.
Yeah.
On the cost tab with landed, and maybe two of our brains combined, we can make it make sense.
All right, where you want to go?
It's down at the location level on the cost tab. And so you see to the right, there's the actual landed cost. There's the landed cost percentage and landed cost. Now the issue is that's not, was the second one 220?
Yeah.
So it's looking like it's showing your last landed cost is what it's showing you. No, because the PO cost was 420. So I don't understand. So is that 220 on top of?
Yeah, I think what it's showing is that it's okay. So the last received PO cost, that's going to be the fully loaded cost.
Right.
And then the landed cost is the portion of that which was landed cost add-on. I mean, I think it's just backing into a percentage from that, which that is 52% of $4.20.
And the $1.10.
That's the next due PO cost. So we've got some, and you can see it's an old PO because it's got a due date in the past.
So it doesn't show you that. So it shows you that we received it at 420. 220 of that was landed cost.
Yes.
So it doesn't give you what the unit cost was before you rolled that into it.
No, not really. I mean, if you want to look at that and how that got affected, I think you can sort of get into that looking at the audit trail. So like if you filtered this down to moving average cost.
Well, no, I just mean like what was the PO cost before the landed cost was rolled on top of it?
Yeah, and that's what I was talking about earlier. Is like I really thought there was a way, and it's driving me crazy that
is it on PO history or cost tab?
It might be. Let's look here. Okay, wait. Yeah, but I was thinking there was another place.
Is there a right click on it or something?
Where you could look at it and see here was the unit price, here were the landed costs that were applied to it.
Okay, so unit price was $2. We added 220 or 230, depending on which one of those.
Mm-hmm.
But there's no way of us seeing that. It just seems.
Yeah, I'm trying to.
Oh,
There it
okay.
is.
There's the.
This is
but
what I
that's
was
the.
looking for.
But that's the total landed cost.
That hit the. Yeah, that hit the entire receipt, or this line of the receipt. You could run a calculated field off here to divide this out by the quantity received, and that would give you a pretty good viewpoint. And if you've not done that before, you know, it's worth doing that.
We are going to do a stream at some point on Dyna Changes and Menu Designer and roles.
And hopefully it'll be better than what I just did.
Yeah, you clicked in the wrong spot. I wasn't going to say anything.
It's just going to let me fall on my face. Okay, that's cool.
A little bit.
All right, so let's get out of here. Do a computed field. And so this is going to be...
These are the dead simple ones.
Yeah, landed cost some amount. Whoops. Divided by...
Received quantity.
CF quantity received, yeah.
Yeah.
We're going to call that unit. I don't even know what to call that. Unit landed cost? I don't know.
Yeah, that works.
And isn't this like one of these crazy things where you actually have to save it, you can then go back into it to
fix the decimals and stuff, yeah. Mm-hmm. Because, you know, makes sense. Why wouldn't you want to make somebody go into it twice? I mean, and to rob somebody of that fun?
Where were we? PO history?
Yeah.
Well, at least it didn't put 1900 decimals behind it.
Yeah, that's weird. Like, oh, and it's not registering it as a number. You have to change that too. Because, you know, it's just doing it to the left like it's alpha.
Oh,
it doesn't. Oh, it doesn't let you do the decimals. Oh, that's right. You have to do it in the actual calculation of the tab.
Is it around? Let's see. It's okay. I think it's like this.
You have to put it in the bracket. Yeah.
And then I think you can round. Well, even if you rounded it, though, that's not going to affect the number of decimals that display.
There's a way to set I just don't remember it. I don't think it's really pertinent right now.
No, it's definitely not worth any more effort than we've already put into it. So
there's a way. There's a way to set the decimals on. I just don't remember. It's been so long.
And I do just want to stipulate that I kind of, when I was explaining how to set those multipliers up, 1.1 means the landed cost will be the extended cost times 1.1, which is why it was $1,100. And I probably wasn't super clear about that. If we wanted it to just be 10%, we would have set it to 0.1. Right. And we can, which is a good reason to test and play, right? Mm-hmm. So if we go back to that driver,
that's a really high landed cost.
In this economy, freight is extremely expensive.
Yeah, that is true.
So if we just go back and fix that. Now
it doesn't go back and fix anything.
Yeah, well, it's not going to fix any open POs or anything like that. But if we enter a new PO, probably already have that screen open somewhere. No, receipts, entry. Yes, I do. Cool. Oops.
Quantity.
Quantity. Goodness. Failing all over the place today. So that probably seems a little bit more reasonable. $100 on $1,000 purchase. I just wanted to make sure we could clearly demonstrate how much.
But you know what though? I just laughed that none of us looked at that and went. Neither one of us.
That doesn't seem right. Like yeah. No. Absolutely. So, we're gonna know really quickly who watched all the way to the end of the video.
Well, in fairness, we've been out of the widget world for a while, so I don't know. Maybe it's really expensive.
Yeah. Who knows?
I don't miss the widget world.
So.
I like getting to play in other people's widgets worlds, not having to live in it.
I don't even think we have vessels and container receiving turned on in this system. So let's.
Well, do we want to go to the?
Oh yeah, we still got other stuff, right? No, we went to the convert PO to voucher.
Yeah. Let's go over that because it doesn't show like I thought it would, but that those landed costs show in converted landed cost to voucher.
Yes.
So it's a little funky to me because you don't see it on the convert PO to voucher.
Yeah. So okay, let's.
Which is weird.
Well, and that actually kind of goes back to what I want to talk about with the vessel receipts and stuff, and planning how you're going to do this.
Oh, look, it does. It shows you which ones have landed costs.
I don't remember that being there before.
I don't either. That's interesting.
I mean, it could have been. I just don't remember.
But like, if you go to the landed cost tab, there's nothing there, and that's the part that's confusing to me. It exists because if you go pull up without posting this, go pull up. Even if you do post this,
here's the reason why. Because you're not paying the landed cost to the vendor.
Got you. Okay, that makes more sense.
So when you set your driver up here, it's payable to who? Well, this is payable to a third party. And I think like if it was a tax driver, the tax driver could be payable to vendor and you would see it then in the voucher screen.
Okay, that
because
makes
it's
more
landed
sense.
Costs that are pertinent to the party for which you're transacting.
So here's where my question then comes in on the freight side of things, because there is a spot for freight in there, but if we already had a landed cost that also has freight on it, and whoever's converting the PO to voucher puts a freight charge in there, and that landed cost is still out there.
Yeah, it could double up. So typically, again, you set the driver up to say, I am paying a third party for this freight, right? And so if your supplier is the one that's charging you freight and it's on your invoice,
then you would set it up.
You would set it there. So this is where I think this is more about planning and minimizing confusion than anything. So for me,
because like clearing a container, you're not paying the supplier for that. You're paying the...
Yeah, you're paying who's ever stripping the container or bringing it to you or whatever.
But if Black & Decker is going to invoice you for the freight, maybe you don't use a landed cost. You just do the freight in the actual...
Right. So, one of the things that... let's just try it and see what happens. Where was our convert? It's in here somewhere. Here it is.
It's that first one.
Okay, so and the invoice amount is for...
Because you'll notice the unit cost is only the $2.
Yes, because that's all you're paying them.
Okay.
And then the freight on it is $30. And then your freight invoiced is $30. So yeah, that's gonna get rolled out to your. I think that
it'll get rolled out to it if the inventory is still in in stock. If not, it's going to go to the variance account. So.
All right. So
now, if you go to landed cost to voucher, you can see. you can see I get what you're saying, where the convert PO to voucher is what you're paying the vendor, but I still see chances for hitting yourself twice.
You can, and that's why, like when we've done the blanket drivers for marking up freight, the scenarios in those cases were that our client, they were controlling all of their own freight. They never paid the vendor freight. Like
they were setting up the
they were. It was all third party bill, and so they were getting freight bills from TMS companies, LTL, whatever, and paying it separately. So it worked really well there. If you're doing, and if you're going to do that, that's how you're going to want to handle it. You're going to want your vendors to ship collect, and newsflash, in a lot of cases, you're going to get a better deal. Yeah. Especially, people are like, well, my UPS rate is not that great. Well, what would your UPS rate be if you were running all of your freight collect? If instead of, running $10,000 a year through UPS, you were running $80,000 a year, that would affect your rate. And so These are things where you need to be able to have that conversation with your freight reps and say, okay, look, I know we're doing this much now because all of our inbound is just being handled through the vendor, but you have no clue and no control over how your vendor decides to mark freight up or not. I mean, they can just charge you UPS book rate and that's it. You're done.
Yeah.
Or 10% off or whatever it is. And so these are things that this goes right to your net profit. This isn't a gross profit thing. This is a net profit thing. And so even though it might be a little bit of extra work, there may be a lot of pickup to be gained on the net profit line if you really start looking at this and going, we should just be doing everything collect or third party and running it through our accounts so that we're getting the best deal for us. So anyway, that's just something to think about on that. Convert landed cost to voucher, right?
Yeah. So if we did set one up to go to the vendor, we would see that landed cost tab have something in it then?
If it was a tax driver and it was payable to vendor, that's where you would see it there.
So is tax driver not really tax?
I'm actually not. I only know that because the drop-down box lit up.
Is it just another poorly named
thing? I mean, you know what? It's worth asking.
Oh no!
I would have probably gotten a better answer out of that. Let's see. Tax.
All right, while you do that, I'm gonna go to the old-fashioned one and get an answer quicker.
I don't want a video.
Oh, not diver. All right, here we go. Landed cost or tax tab or tax driver checkbox indicates the landed cost driver is used for tax purposes, has its own accounts predefined in landed cost driver maintenance, and does not affect inventory costs. So I think this is going to be a case where you don't have a reseller certificate on file with the vendor and they're charging you sales tax, which you're then going to book and ostensibly claim credit back on the tax that you're paying to the government, because it's like, hey, I don't owe you, I don't owe sales and use tax because I paid it here. That makes sense.
Yeah. And that would not necessarily affect your landed cost on the inventory. So yeah, I think look, if you're doing domestic freight, PO, if your vendors are charging you freight, then you probably want to stick with that. Now again, if you tell me that your problem with that is I don't like the way that it prorates the freight across the items, okay, let's have that conversation and let's fix that. But beyond that, if you want to go to a domestic freight driver, then you need to start looking at things like, okay, how do I start pushing that through a third party? Okay. So same thing here.
You gotta put your vendor ID in.
Yeah, but I don't. And then it's, so you can either go by an external reference number or a transaction type. And so we're going to say this is a purchase order receipt, and it's going to throw out all the different ones. So we can just invoice this one. And at this point, it's just like any other vendor invoice or voucher. It's just, all it's doing is pulling it out of your landed cost clearing account and moving it through into AP.
Putting it in the inventory or AP.
Yeah, it's put it into AP because it goes into inventory. So and that's, I'm glad you asked that because I didn't even think about talking about that. So it's going to work just like a purchase clearing account. So in a purchase clearing account, when you receive inventory, it's a two-sided transaction, as all of them are. So one side is inventory, the other side is purchase receipts clearing for the value of inventory. And then when you do convert PO to voucher, it comes out of the clearing account and goes into accounts payable. And then when you write a check, it comes out of accounts payable and goes against cash. Landed cost clearing is the same thing. The landed cost portion of the transaction will hit the landed cost clearing account. Then when you vouch it, it's going to pull it out of the clearing account and it's going to hit accounts payable. And then same thing, out of AP and against cash when you pay.
So unlike like when you're doing freight at PO, convert PO to voucher, which at that point it's going to go try to roll it up into the inventory cost.
Yeah, all that's already been done.
The landed cost has already hit the inventory cost. It's just in a different bucket than the PO.
It's in that clearing bucket. Yeah.
Okay, that makes sense now. I'm not an accountant guy, so
I barely play one on YouTube. Because there's a lot of intricacies with that, that when you get into some of these special cases, you really want to test it. You want to look at the ledger and make sure it's what you think it should be, so that you're not getting any surprises. And you may have to set it up 2 or 3 different ways to find a way that works for you.
So let me ask you this question. So we had to put a vendor ID to pull in that, but we're not paying that vendor for that landed cost. So how does that work?
Well, so we kind of took the cruddy way out. Let's do somebody that's completely unrelated. See, I still get the POs.
Okay.
It's which POs are you paying? So typically what happens is okay, you're going to pay all of your clearing costs to your customs house broker, right? So you would actually be putting in your custom house broker's vendor ID. And then what I would do, and this is why I try to use different categories as much as possible and really make things split up and granular, because then that allows you to come in and say, okay, filter this to anything that contains customs, or clear, or however you set those driver names up. And then you can very quickly just say, okay, now it's filtered. Now I'm going to select all, and we're going to catch all of these different costs. Or alternatively, your bill is going to come in with a shipment number or PO numbers or whatever it is, and you're going to use that. Now, if we were doing it by the vessel, I think vessel receipt would be an option on this. I think.
Well, it had external number. If you typed in the PO number,
that's your external reference number on your PO. But I think if vessel receipts and container receiving is enabled, you get more options in that drop down.
Gotcha. I got you.
We can test that out because I definitely do want to just kind of bring that up and talk about it a little bit. And I think we actually have a vessel receipts thing in the pipeline somewhere where we're going to go deeper on vessel receipts and container
receiving. Yeah, we so this will be a little quick preview.
Yeah.
Now, so to go back to my little question at the bottom here.
Yeah.
This is the way P21 is set up to handle tariffs.
This is the best way to do it. And this is a great example because what you're going to have You know what? I want to take a minute. Let's do this example. We got plenty of time. So let's do this example as trued up as we possibly can.
Okay.
All right. So what we need first is we need a vendor to pay to. All right. So yep, I like all that. Now, I'm going to change them to an expense vendor because we don't need a supplier for them.
Okay.
And then you can default in your purchase account. I doubt we have an AP account for duty or an expense account for duty. It's really not sales freight either. Oh, it's none of these. I don't know. I just uncategorized expense for now. I don't have anything better. Okay, so that should pretty much get us there. Warranty receivable account. Are we kidding? Yeah, since this stuff doesn't really even apply, I'm just gonna kind of pencil whip it all in. Please don't do this in your system. Okay, so now we have a vendor for U.S. Customs and Border Protection. And, I mean, again, different companies are going to do it different ways. Bigger importers are paying U.S. Customs directly. Smaller ones, or depending on how your deal is set up, you may have it where your broker pays it and then you pay the broker. Everybody's deal is going to be a little bit different on that, but I want to make this as clean and direct as possible. Okay. So what we need then is a landed cost driver called duty. And this is going to be, and we have to be kind of exact on this. So you might, because you're going to have different duty rates for different products. And so you really have to start thinking through, like, how am I going to organize my product groups? How am I going to organize manufacturing classes or whatever it is? And I mean, it's like at the item level, you don't have that many choices in this system for duty drivers. So, if you have something that's very homogeneous, look, it's everything that comes from this supplier has a duty rate of X percent. Great. That makes it really easy. But, it may be that, oh, well, this product group is this and that product group is that or whatever. So what we're going to do is we're going to take something that's kind of simplistic, but should apply if you have a fairly homogeneous product groups. So we'll put this back on Black & Decker. So when we buy from Black & Decker and we're in the default product group, which obviously you wouldn't do this for default, you would have like legit product groups, then that's when this driver is going to hit. So if your product groups are sorted based on their HTS code, this is going to work really well for you. If it doesn't, this is what I was talking about earlier, where you could use manufacturing classes, assuming you're not using them for something else. I think I've seen 2 people that use manufacturing classes ever for something other than what we used it for. But manufacturing class gives you a lot of options here. So if you're looking for a way to set it up, that's something to look at because chances are you're not already using it. All right, so same thing. Now, duty is always calculated based on product value, and it's the purchase price it's based on your cost. It's not based on what you sell it for. So let's say this has a 3.5% duty, so that's going to be 0.03. Oops. 0.3. I keep hitting the decimal button. 0.35. So this right here, and we're going to apply it when we receive it. And this could be set up for vessel receipts or container receipts. Again, I'm going to get into that in just a minute, but basically you're going to set this up as a multiplier against extended cost, because when you calculate duty, that's exactly what it is. It is a percentage of product value. So this is duty, Black and Decker, D products. And so, you may need duty, B and D, something like that. Matt is 100% correct. You really need to think about your naming schema for this, because it goes to how you're going to be able to filter stuff. It goes to just being able to understand what the heck is going on as you're doing transactions. All right.
I like being right.
Everyone does. Okay, so now we're going to put in PO to Black and Decker. And yeah, there we go. And there's our duty hitting. So we have our 10% freight costs, which works out to $200, and then our 3.5% duty, which 3.5% of $2,000 is $70. So that's exactly how you would set that up. And then we'll go in here. That's PO number 14. You need to receive that. I bet you it's going to lot bin me again. Nope, that time it got... Oh, yeah. So stupid. Okay. So now we've got the receipt done. Okay, now the goods are in inventory, and here's what happened. So we had $270 of landed cost and $2,000 worth of product cost. So when we received that PO, we had $2,000 went into purchase receipts clearing. $270 went to landed cost clearing, and then $2,270 went into inventory. So from a GL level, that's what the split was. All right, so we go to PO, convert PO to voucher, and it's Black and Decker. Oh yeah, we just received this. It had landed cost. The thing is, that's almost not even relevant. I mean, it kind of is, but it isn't. So,
I'm like, what are you going to do with that information?
Yeah, other than just know that it happened, right? So the invoice amount here is $2,000, and it's whatever. There is no freight, there's no add-ons, there's no nothing like that, because we're just paying the vendor for the actual goods. That's done. Now we go over to convert landed cost to voucher, and now we need to pay customs. So we are, we have our entry summary, or we have our bill from customs, and we go in and we put that invoice number in, and it's for $70. And we're going to go in and say, well, we know these were on PO receipts, or maybe we have multiple, right? And so this is why I'm saying it's like, okay, all my duty gets paid to U.S. Customs and Border Protection. So let me just knock it down to all my duty drivers. And then if I had multiples, I could just select all and okay. And bang, they're all there. And so you can see it's showing me exactly how all of this hit and, where it came from. Oh, this was receipt number 17 from PO number 14. Here was the multiplier. Here's how it was calculated. This is how it ended up shaking out. It's very, very, very clear. And then if customs then comes back and they hit you for something else, maybe there's some sort of a surcharge or whatever, you can put that in there too. Like, oh yeah, there was a $5 processing fee or something like that. So you would just go over to your additional charges to get this into your payment and turn 70 into 75. This is also going to show you what account it's going to hit. You know, all the normal things that you would see in one of the voucher screens.
No, wait, but you didn't account for that $5.
Oh, yep, you're right. It's not going to balance. So it was actually a $75 invoice, 70 of which was landed cost, $5 of which was some miscellaneous charge. And that's it. Now I have the voucher. So that's how it works. And you know, the bummer is when you're importing for overseas, you're going to have one bill to pay the supplier, and then depending on how you do freight. Now look, this is all about your freight terms. So if you're buying DDP, which is delivery duty paid, that means it's an out the door, supplier covers all costs. So you're probably only going to write a check to the vendor. You're going to receive it, and when you receive the inventory, cost is pretty much already fully loaded. But if you start getting into, we're going to do, it used to be called CNF, or which is part of those costs are paid. So like, but then parts aren't. And so, or you could be like doing FOB. And FOB means you're transferring title of goods. This is crazy. The goods become yours as the container passes over the rail when it's being loaded onto the ship. So like at the moment where if this is the rail on the side of the ship, at the moment that the container goes over that rail and is hanging over the ship instead of over the dock, it's yours, and you become responsible for all fees and charges from that point forward. You could do X works, which means you're going to pay all the costs from the supplier's dock to your dock. So there's a million different ways that these deals get done, and there's a lot of complexity. So the point is, if you're doing like FOB, you're going to potentially have an ocean freight bill. You're going to have a customs bill. You're going to have any other additional inspections and fees bill. You're going to have a broker's bill, and you're going to have a drayage bill. So to get that one PO received, you could be getting 5 or 6 invoices for that.
And have to do 5 or 6 vouchers.
Yeah. And look, that is the nature of business for some companies. Yep. So I will tell you this from direct experience. If you are importing a lot of material from overseas, or if your business has grown where you are doing a large amount of importing, you need to suck it up and change your terms to FOB. And here's why. When your terms are FOB, yes, it's a lot more work on the accounting side for you because, again, just like Matt said, you got 5 vouchers. But what you also have is absolute clarity of cost.
And no filler.
Right. And if you get popped in a customs audit, and I have lived through this. If you get randomly pulled for a customs audit or they have another focused assessment, what will happen is they will start pulling bills of lading or entry summaries. That's what they'll pull, is entry summaries, because that's what they have. And they're going to say, show me all the documentation on this. And if it's a DDP, or if it is a CNF where the supplier's paying the freight, you will end up having to go back to the supplier, and they will have to prove that the freight that they charged you is what they paid. Because from an import-export perspective, you're not supposed to make money on freight. It's supposed to be at actual. Right. And the reason for that is because it gets into all the statistics and everything that are collected on how much of XYZ HTS code products are brought into the country and what the value of those goods were. Well, if you're taking some of that value and hiding it in freight, or you're making extra money off freight, which should have been part of the value of goods, believe it or not, the United States government doesn't really find that humorous. And so, so I'm just telling you guys, if you're getting into this, it's painful. Getting suppliers, if a supplier's fighting you on it, you know they're making money on freight. Just plain and simple. But to the max extent you can, you need those costs to be controlled in the U.S. And that may mean that you have to work with a third-party logistics provider or something like that on the U.S. side. But your deal with your supplier, if you can swing it, you need to be working FOB. Because that allows you to have the most visibility into what your actual costs are, and it gives you the ability to control those as best you can. So again, if you're importing 2 or 3 containers a year, just it's probably not going to be an issue for you. When you start importing thousands of containers a year, it becomes a significant part of your business, and you really need to understand what you're letting yourself in for. What we find is a lot of times people start off, they're importing a container a month, and before they know it, it's 10 and then 50. And all of a sudden, they've got a $30 million import-export operation. They don't even realize it. So, yeah, I've been through a Customs and Border Protection focused assessment. It's very aptly named. It is extremely focused. We got through it, no problem, but whew. Okay. Did that cover? And tariffs would be the same thing. I mean, duty and tariff, whatever. But if there's a tariff on top of the duty or countervailing duty or something like that, you would just layer in another one on top of that, or you could blend them together if you wanted to, whatever you want to do. And then just change the percentage of the driver whenever that expires.
The only other thing that I had on a note on is there is a report for unvouched landed costs.
Right, and it's just like the unvouched PO report. This is a catch-all report that you should be running on, fairly consistent basis, just to make sure that you don't have stuff hanging out there that you haven't accounted for. So this is just showing you, hey, we have these landed costs. This is basically the sub-ledger of your landed cost clearing account. So it should add up.
Interesting.
What do you mean?
How do you address the transfer one?
Well, we haven't vouched it yet. So if we go in, I think I closed that window. So because remember, we have to pay transfer freight to somebody, right?
So what if you are the transfer freight? Like if you're it's an internal thing.
Then I'm assuming you would clear it out to an internal vendor and you'd be writing a check to yourself. That's really kind of the only way I could think of that you could deal with it. Let's see. Let's go convert landed cost to voucher. We'll use U.S. Customs and Border Protection because they need more money. Yeah. Did I say that out loud?
Uh-huh.
So same thing. Now you're going to hit transfer receipts and you'll invoice it that way. That's it. So yeah, I mean, you could set up an internal vendor and now you have to write yourself a check and it just kind of goes in a circle, or you credit it off or whatever you want to do. A lot of people will just let that build up and then they'll credit it. They'll do a debit memo or a credit memo to just clear it all out.
Okay. Because paying it or not still doesn't hurt the inventory cost. It's still an inventory cost. It's just sitting in that bucket that clearing bucket that needs to be cleared.
Okay, so I'm just going to try to clean some of this mess up, as often happens. All right, now I got to remember, I think it's under inventory. I don't even remember where it is. I guess I could
Go
search for it.
Yeah, I was about to say. That's always my go-to.
Okay, so we enable container receipts and then require PO quantity validation before container building. I'm not really going to worry about that. I really just want to get the feature up and running.
Now you gotta log out, log back in.
Yeah, well, you know, that is life in the fast lane, man.
If you're keeping up, I still haven't heard from AT&T.
I was. I did. Well, you know, your camera glitched out a little while ago, and I just kind of figured that's what it was. I was like, oh, I guess they called.
I don't know. Maybe they're outside. Let me see. Man, they're out there pulling cables out of the ground.
All right.
Nope. There's no van or nothing out there. Shocking.
Okay. So what I want to talk about is some special considerations if you are in that spot where you are trying to build out landed cost for a more intensive, scaled up import-export operation, because we've been there. And what we found out, the first thing that we tried to do was stupid. It seemed intelligent. We set up sea freight at the vessel level. So what happens is you get some more options now that we've enabled container receiving. Our application points now we can do container receipts, PO receipts, transfer receipts, and vessel receipts. Okay. And so we had a lot of different conversations where it was like, oh, it's going to be our rate for freight is X amount of dollars per container. So we thought, oh, okay, well then we'll just set up on container receipts. We were going to set up, let's see, on the container receipt, we would do $2,500, right? That makes sense. And then kind of the same thing for drayage. It's $350 per container because you're only getting one container on a chassis. So that made sense to us. And then we set up, we had one that got applied at vessel receipt, and that was for duty because it was based on the extended cost of the entire shipment. So that made sense. So we tried to set all that up, and it was a mess because the reason it was a mess is just what you pointed out, Matt, when we looked at the landed cost tab in Convert PO to Voucher. When the application point of the driver determines where you can see it in the system. So because we had container receipts happen after vessel receipts, they're not the same transaction. So what was happening was we would pull up the shipment, which was the vessel, and we would only see like two out of 4 drivers, because we then had the clearing, which was on a per vessel basis. So we had 4 drivers, we could see 2. And that starts to get effect when you can edit them and so on and so forth. And it was a disaster. It didn't work. And so even though it's not as mathematically perfect, what we decided to do the second time around was we're going to make every driver apply to the vessel receipt, and we will back into how to figure out the cost. So with sea freight, instead of saying $2,500 a container, we did an analysis and figured out that their container loading average was about 37,500 pounds per container. And so we said, okay, well, the average freight rates from China to this warehouse is $2,700, and the average container load is 37,000 pounds, and you work that into a number of cents per pound. And so we did, the calculation method was some number of cents per weight so that it would calculate this. And the reason that we did it all this way was because we were able to set up a process where they got their freight bills. They had everything but the drayage bill most of the time before the goods were actually received. Okay? So by setting it all up to hit the vessel, you could literally go back and true up those landed costs before the goods ever got received and basically drive your variances to near zero, because the drayage was really one of the smaller parts of the entire expense. And so you're talking $30 and $40 variances on $50,000 worth of goods. Not a big deal. But you could adjust your ocean freight before you ever receive the goods. You could double check the duty and make sure it was right. You could add in those inspection fees and all that, so that what we ended up with were landed costs that were, I would say, 99% reconciled as a, from the perspective of value. They were 99% reconciled before the goods were ever received. And that kept the variances to a minimum. So the whole point of that story, if you're watching this, is it's really about, like, yeah, I understand you pay freight by the container. I understand you pay drayage by the container. But to give you the maximum flexibility to keep those costs trued up, a lot of times you're better off applying the landed costs earlier and backing into some formula, some rough formula that says, if for whatever reason we don't get that freight bill, at least we got some amount of freight on that shipment that's reasonable.
Right.
So that's really why I wanted to kind of talk about the vessel receipt part, because it's the same thing. There's a landed cost tab for it as well. It looks just like the other ones. And like, you can literally go in there and unapprove. If you need to make a bunch of cost edits, you can unapprove the vessel receipt even after it's already approved. You can deapprove it, true your costs, reapprove it, save it. And when you receive those containers in, you're good to go. You're not going to have a problem. So that's really all I can think of, man. I don't know.
No, I mean, and I knew it wasn't going to be a topic and they don't all need to be 4 hour streams.
But they're so much fun.
Now
we're 3 hours in.
No, we're 2. A little bit over 2, right?
Is it?
Yeah.
It says 3:06. So it's almost 1 o'clock. I don't know. It doesn't matter.
Whatever. Well, you started yours.
Oh, I started it way early to get everything set up.
No, it's one of those topics where the concept is easy enough to understand. It's just actually implementing it in a way that's useful. Yeah. So just like everything, once you do a simple one, right? Make sure you understand how it is applying, where it's applying, and just test it. And then expand it. Don't try to overcomplicate it. And then when you are ready, plan it out in an Excel document.
Yeah. Document what you're doing. I mean, that's a huge part of it, is really committing to paper or digital document or whatever. This is our thought process. This is what we're doing. Because at some point 5 years from now, you're going to need that. Yeah. You're going to need to remember, why did we do sea freight as cents per pound?
I mean, that's your recommendation of the day for business in general. Document your processes and why you decided to do them.
It doesn't need to be a 67-page Word document, folks. Like, we use a system here called GitLab, and it manages all of our source code control. But one of the things that we really love about it is you can create issues against projects, and you can then say, like, Kelly and I are working on a project right now. She's working on one side of it, I'm working on the other. It requires a lot of coordination for us to make sure we're not, stepping on each other, or really just one person's doing something that's not going to jive with what the other person's doing. And so we use that to communicate, like, here's our thought process. This is what we're trying to do here. I'll even take snippets of screen grabs of code, say, okay, this is how I'm implementing this, so that 2 years from now, when we have to make a change to this massive integration that we're working on, we'll at least know why we set it up that way in the first place, because it's going to come up and I'm not going to remember.
Right. I mean, you can also put little comments in your code.
Yep.
Like
I
document
do that
why.
too.
No, I know. That's, anyways, we always talk about planning, pre-planning will go a long way for everything you do in P21 or anything really.
Yeah.
I'm not a big fan of just winging it. I don't wing it in my personal life. I can't wing it in my professional life.
No,
like I'm one of
absolutely.
sometimes I'm that not fun guy if you go to Disney World with me, because I'm like, all right, at 1 o'clock we're gonna try to head over here. At 2, like before I hit the park, I have an itinerary planned out.
Look, at Disney,
Or I stress out.
I'm saying at Disney, you can either do that,
Yeah.
or resign yourself to the fact that you're going to ride 2 rides today and that's it.
Yeah.
So it's going to be like $200 for a roller coaster ride when it's all done.
Yep. I got a plan. Everything I do. If we go to the Ren Fair, that's what I do. All right, here's the map, here's the times. We're going to go around here. We're going to do this. We're going to do that. If not, you don't do anything.
Well, here's the thing. And again, I know side quest, but it's the older I get, I'm creeping up on 50, which I can't even believe. But I still got a little ways to go, but it's clear. I can see it. I can see the exit ramp right now.
Mm-hmm. I see it at the bottom of the hill.
Yeah. But what you realize is time is the one resource you cannot buy more of. So you can't afford to waste it. You can't afford to waste it on useless meetings and arguing back and forth on, oh, I thought we talked about this, or I meant that, or whatever. You got to reduce it down to even if it's just an outline. Look, these are the basic tenets. Here are the things that we need to achieve. Those things you have to have clear, and you need to understand what the big things are that you're trying to accomplish are. Like, okay, here are the 3 big ideas with this. We need to make sure that we can price correctly. We need to make sure that we can do this correctly, and we need to make sure that we can do that. Those are the 3 big ideas. So no matter what else happens in this project, these are the 3 big things that we need to achieve. Because once you've identified them, and I didn't make any of this up. Go look up strategic or principles of strategic leadership, David Petraeus. This is exactly how he led his generals and colonels in Afghanistan and Iraq. But you get the big ideas right, then you communicate those very, very clearly. You oversee the execution and implementation of the big ideas, and then you go back and refine them and adjust, and then start the process over again. And if you're not doing that, then that just means it's not that important to you.
Right.
So, Matt, I don't have anything else, man. I think we've exhausted this one.
I think I'm good.
Awesome. Well, we really appreciate you guys, and hope you got something out of this. Again, if you have ideas for future topics that don't involve us teaching you how to program, because it's just a line we're not going to cross. But anything short of that, if we're talking about how different things work in P21, or we are starting, I think, Matt, to talk a lot more about business stuff in general. Like we do get into these topics of, hey, forget how it works in P21. What is the right way to cost your inventory? What is the right way to do this? Running a distribution business, it's amazing, right? You're the middleman between your suppliers and your customers, both of whom are trying to put you out of business every day. And if they're not necessarily trying to put you out of business, but they're really trying to probe to figure out what's the least amount of money you're willing to make and stay in business.
Right.
So we get it. It's tough business. We've all been in it. And so we're happy to talk about any of those topics too. So we thank you guys, and we look forward to seeing you on the next video.